No one's talking about the banking crisis. No one, anywhere, any place. We're looking at the data here on the markets and what's going on. Gold. Oh, how about oil prices, huh? Brent crude took a big hit today. Brent crude is now selling for around $73 a barrel, down almost 5%. A couple of weeks ago, Brent was selling around $80 a barrel. It's going down because the markets.
Good evening and welcome to our financial news update. Today we delve into the latest insights from renowned trend analyst Gerald Celente, who has just revised his predictions for the precious metals market, signaling what could be a massive economic collapse in the coming months. Let's start with the state of the oil market. Brent crude has seen a significant drop, currently trading around $73 a barrel, down nearly 5% from just a few weeks ago when it was hovering at $80. This decline is not isolated but rather a reflection of a broader market downturn. As the global economy slows, we're witnessing a direct impact on oil prices, a trend that could be an early indicator of more profound economic challenges ahead. Turning our attention to China, the demand for silver is surging. Chinese imports of silver have hit record highs, breaking the 400-ton level in June and July of this year, compared to an average of 200 tons last year. This surge is not just a matter of stockpiling, it's indicative of a strategic move by China to assert its dominance in the silver market. The Shanghai Metals Exchange reports that silver prices in China are consistently higher than those in Western markets, with premiums reaching as much as 10%. This aggressive accumulation by China could have significant ramifications for the global silver market, potentially driving up production costs in industries ranging from electronics to solar panels. However, there's a twist. While Chinese demand is driving prices higher, the broader market outlook remains uncertain.
Not a good day. Labor Day, by the way. Labor Day? We're plantation workers of Slavelandia. What labor? Labor Day. The chains own everything. And it's disgusting. You look at the data. You know, when I was a young guy, all the polls used to show that the future will be better than the past. And now it's the opposite because the bigs own everything. Labor Day. Anyway, Slave Day. The markets. As we keep saying, things change after the summer holiday, and the summer holidays are over. And it hit the markets. Nvidia plunges almost 10%, dragging basket of chip stocks to worst day since March 2020. Black Friday. He declared a state of emergency. Yeah. That's where the markets are right now. Everything was crashing. Knocked off almost $300 billion in market cap. But don't worry, they're still up 118%. And let's see, the Dow Jones fell 626 points, 1.51%. The S&P down over 2%. The NASDAQ down 3.26%. The market initially took the leg down Tuesday morning after two readings of manufacturing production showed sign of weakness. No fucking shit. Manufacturing production has been showing signs of weakness now for years. And not only in the United States, globally. S&P Global showed decline from July to August, while the Institute for Supply Management came in under the level anticipated by economists, gamblers. This data reignites concern around slowing growth with the U.S. economy. So, you think they're going to lower interest rates? You bet they are. And again, the lower interest rates fall, the deeper the dollar declines. And the deeper the dollar declines, the higher gold prices go up. Remember, top trend 2024, a golden year for gold. While others said this, no magazine in the world predicted the global golden year for gold.
Recent data points to a slowdown in manufacturing production, both in the United States and globally. The S&P Global Report shows a decline in manufacturing from July to August, and the Institute for Supply Management's figures came in lower than expected. These signs of weakness are fueling concerns about the sustainability of current market trends. As we move forward, all eyes are on the Federal Reserve. There's growing speculation that the Fed may cut interest rates as early as next month, a move that could have a profound impact on the markets. A rate cut would likely weaken the U.S. dollar, making gold a more attractive asset, and potentially leading to higher prices for the yellow metal. Celente has long predicted that 2024 would be a golden year for gold, and this scenario seems increasingly plausible as we approach the year's end. But it's not just gold that stands to benefit. Silver is also gaining momentum, bolstered by expectations of lower interest rates and geopolitical tensions in the Middle East. Despite the dollar's recent strength, which typically dampens silver prices, the prospect of a rate cut has kept investor sentiment positive.
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
Yet, there are concerns on the horizon. Sluggish demand from China, a significant consumer of silver, could weigh on prices in the long term, especially if the Chinese economy continues to struggle. In summary, Gerald Celente's latest forecast paints a picture of an increasingly volatile economic environment, with oil prices falling, silver demand surging in China, and potential interest rate cuts on the horizon. The markets are at a critical juncture. As we move into the fourth quarter of 2024, the stage is set for significant shifts in the prices of gold and silver, driven by a complex interplay of global economic forces. Stay tuned as we continue to monitor these developments and provide you with the latest updates on the financial markets.
Gold. Oh, how about oil prices, huh? Brent crude took a big hit today. Brent crude is now selling for around $73 a barrel, down almost 5%. A couple of weeks ago, Brent was selling around $80 a barrel. It's going down because the markets are going down. And these are the facts. This is the Financial Times today. Again, there's a global slowdown. That's why you're seeing Brent crude go down so low. This could be the beginning of a market crash. If the markets crash, Trump will win. If the equities stay around where they are, he won't. But remember, they're going to lower interest rates. And the lower interest rates fall, the deeper the dollar sinks and the higher gold prices go up. This is from Haaretz. Shin Bet chief warned Netanyahu of imminent war before October 7th. We've been saying this for how long? As I said, when all else fails, they take you to war. People forget. People forget the 39 weeks of protests that were going on in Israel because of his Judicial Reform Act. It would have kept him out of jail.